Michael taken to the sidelines ahead of the big decision from the Fed.
Yeah, it's very typical, Maria, that folks would be shying away from, being involved in the market. Add that to the volatility, add that to the time of year that we're in right now, and you're going to see this quietness. Given the volatility we've had, I think it's the biggest factor keeping people on the sidelines, and that's really contributed to a lot of this uncertainty. If this was really all about the economy, as the economists have told you, then the Fed would have raised rates a year ago, and they'd be looking to do so now if they hadn't already, which they haven't. But this is about the markets. I don't care. I know what everyone else is saying. Data dependence. I think that's bunk. It's been debunked in my mind. It is about market volatility and how the rest of the world is affected.
But what's the impact of a quarter-point move, Sandra? I mean, everybody's saying we're one and done. It's not like we're going to have a string of interest rate increases that's changed the credit story so much.
It's just nobody knows because this has been such unprecedented times, and for the Fed to be involved for this long to this capacity. Somebody on this program the other day was talking about the taper tantrum and looking back to 2013 and just the mention of tapering and what happened to the markets then. John Hilsenrath made a great point. If they were going to do this, wouldn't they have prepared? Wouldn't Janet Yellen have prepared the markets so that we didn't get what could be an extreme reaction in the markets? I think that's why we're seeing the probability less and less that we're actually going to see a hike
But I think it's because we keep getting data points that underwhelm. So it's like you could not have predicted that we were going to see so many data points underwhelm. So I feel like I don't even know if she knew what she was going to do before the last retail sales number, before the last employment number.
Yeah, how can you tighten to a borderline recessionary environment?
That's absolutely right.
That's just it, and we're late in the cycle, and even the job growth is slowing. Wages are not where they should be. Inflation at CPI yesterday was terrible. It was in line with lower expectations. It was not good. It's not a kind of number we should be tightening on. And again, the market factors. One thing that John talked about on paper today that we didn't address earlier when he was on is this fact that you have this string of central banks who think everything's better. The ECB tightened in 2011, worried about commodity inflation. What happened? Spain was about to sink into the Mediterranean about a year later, and they had to start tightening again, and now they're easing again. Excuse me, and now they're easing and easing again. He mentioned the Riksbank in Sweden as well. Let's not forget, unlike the Riksbank, what the Fed does affects the rest of the world more so than the ECB, certainly the Riksbank, certainly the BOE, certainly the BOJ. This all matters. The Fed knows this, and they know, for lack of a better way to put it, they're trapped.
International markets were mixed. You had China down better than 2% overnight. Japan was up 1.5%. Europe is mixed right now. I think it was really telling what Wilbur Ross told us yesterday, and that is the next problem in Europe will be France. Okay, so I continue to ask the question, can the U.S. sustain growth when all of our trading partners around the world are challenged? And is France the next issue?
It's a great question to be asking right now. But the markets have been challenged with Europe's problems, and they've been surprisingly resilient in the face of weakness in Europe.
Best game in town internationally, the U.S.
It's certainly going to be difficult, but let me plant the seed here. We've been talking on the news segments here about the refugee crisis going on. And you notice that we hear a lot about what Germany's doing to solve this. We don't hear a lot about France in this regard. But just to get back to that, we're talking about monetary policy. It's Fed Day, and that's what we've been talking about. No one's talking about fiscal policy. Germany is obviously very tight-fisted. They're known for these balanced budgets. The finance minister there has come out and said, we're not going to spend money to take care of this. Well, to which I say, hey, Wolfgang, how are you going to take care of this? How are you going to take care of this, Dr. Schabel, Angela Merkel? How are you going to take care of this? I think we could be entering into a period in the intermediate to long term, guys, where we're really looking at expansionary fiscal policy. I know we don't like talking about it. Does that extend to the U.S.? Certainly, we used to worry about the debt crisis and the debt ceiling. Suddenly, that's out of the mainstream right now in terms of what we care about.
Right. Well, we like talking about it. They just don't like instituting it. But there was a lot of talk about fiscal policy
they do it.
Last night. Michael Block, good to see you today. Thank you so much for joining us. Michael Block from Rhino Trading. Sandra, we will continue.